I'm gonna show you how to make $100 in the next 10 minutes, and if you don't use this secret watch list indicator, there's a chance that you will never quit your 9 to 5. So let's get to it. Go to Tasty Trade, link below. Go to Tasty IVR. What is Tasty IVR and how to even go here? Go to Tasty, they have a lot of watch lists in here. Go scroll down to Tasty IVR right here. It will give you a list. If you see this one, we are now on step 2. Check my channel for step 1 and other videos. Step 2, Tasty IVR sell 8 ATR puts for over 100 IVR stocks monthly. What does it mean? It means that I'm filtering IVR. I don't care about any indicators that all of you watch, RSI and all that. I go by IVR in Tasty IVR, and anything over 100, I'm looking to make $100 today in less than 10 minutes. I have scrolled and I'm looking for stuff that I know. What do I know? I know Syntax, I know Dollar General, Dollar Tree, FICO, Super Microconductor, all those Iron Mountain and APD, which is, I think it's like payroll. All those stocks today trading at over 100 IVR. Why is this important? Because I'm gonna sell naked puts so far out of the money, 8 times the ATR, and if the stock does go there, great, I'll be happy to own and get rid of this with a covered call and collect more income. But if it doesn't, I will make at least $100 today. So what have I picked? I've picked DG, Dollar General. Price today $83 right here. Look at this, IVR $109, 109 over 100, which is absolutely insane. If you watch my channel, you know that anything over 50 means that the options are expensive, and if options are expensive, you need to be an option seller. IVR percentile 99.1%. And as a bonus, I also like this one, IV exchange, 5 days over 19%. Anything over 5 or 10% in the move in the IVR, in the index implied volatility in the last 5 days on average, good. I'll be an option seller. And if I just change this, I see that the earnings right here are December 12th. So what do I do with this information? I go to the chart, and my chart is different than your chart. What do? I look at the most important indicator, which is this one, ATR, average true range. In the last 14 days, DJ, Dollar General, have moved on average $2.17. Now they had earnings, and I think the price went down from 120 to 83. There's more earnings coming up next month, and now we're still around 83. We haven't moved a lot. Now if you see here the price 2.17, and you do this, this is the price that the DJ moved, Dollar General moved in the last 14 days. So about 85 to 81 is the expected daily move. It doesn't mean it's gonna happen, but it should on average to move at this amount. I'm gonna take this number because I don't want to move just one ATR. I don't want to move 2 ATR. I'm gonna multiply this by 8. Why 8? Because I want the price to go so extreme to the downside, and if it does happen, great, I'll own the shares and get rid of them as a covered call if it does happen. But if it doesn't, collect $100, move on. I'm gonna click here, and I know the price is 1736, which is about, let's say, $18. And now I'm gonna take that number 1736, and I'm gonna do this minus this, 83, 95, 83, 52, let's call it, minus 1736. And now I know that I have a number to sell naked puts on around $65, $66. This is the number. I got my number. I'm gonna move on to the trade section, and I'm gonna go to actually collect $100 in less than 10 minutes a day. That's it. Now, if I am doing this and I have a chance between Dollar General and Dollar Tree, I would try to maybe take the trade when it's green. However, I prefer to take the trade when it's green instead of red. Red means that we're about to squeeze. Could be to the upside, could be to the downside, I don't know. But since I sell so far out of the money, if you do this number, this divide by 83.51, about 20% drop. The stock needs to drop another 20% by expiration. I'm not gonna risk a lot. Just gonna show you an example with one contract to collect $100. If the stock does drop 20% and they drop 30% like 2 months ago on earnings, then yeah, I'll be happy to buy the shares. Not forever. Not forever. Do a covered calls and get rid of this a month later. But look at this. IVR 112.78. Okay. Every time, as I said, if it's over 50, that means the options are expensive and I prefer to be an option seller. And this one, the Kettler channel, also I changed the settings so it will be on the 8 times the Kettler channels instead of the regular Kettler channels. You see here the range is 83 is the blue line. You want the stock to be around the blue line because you want the stock to go nowhere. That's it. And on the top side is 110, on the downside is 61. You see, if it goes 8 times Kettler channel, we are about here. So we might just hold the stock for long term because at 60 it could be undervalued if it does go there by expiration. So what do we do with this information, the 66 put strike? We're gonna click on trade, and in trade I have picked December 20 right here. Okay, this is the option chain. I went to 46 the days to expiration, and I ignore all the weekly because there's less less liquidity. This isn't Apple or Nvidia or Tesla stock. Okay, but you can make money on other stock. You don't have to just trade Nvidia stock or stuff like that. I've picked December 20, 46 days to expiration. This is the put side. Remember we had the number of 66. I picked the 65. I clicked here. Look at this. I clicked here, and this is absolutely crazy. Now you see the brown line in here. This Tasty Trade gives us a brown line that says the expected move of the stock, the Dollar General, is expected to move. It's not accurate science, but the market makers are expecting the stock to move anywhere between $70 and $95 on both, like to the extreme in the next 46 days. We are selling 65, which is even outside the expected move. And look at this. One contract, this is why it's so important to trade for me on Tasty Trade compared to Robinhood. I'm collecting today, if I execute this trade, I'm collecting $116 over $100 a day in less than 10 minutes, collecting $116, theta decay of $4.11. Every day this option will lose $4, $4, $4 until expiration. POP, probability of profit of 86%. There's a chance that this option will expire worthless and Dollar General will not go below 65 by expiration. Your max profit is right now $116 a day, but look at this beauty. BP EFF, buying power affected 2,275, let's call it $2,300. To execute this trade, you are making $116, $120, depends when you take the trade. Let's call it $120. Your max risk, not your max risk, your buying power affected is $2,300, give or take. If you have taken this trade on Robinhood, they would ask you to put $6,500 on the line. Why? 65 times 100 for $100 per 100 shares per one option contract. On Robinhood, the same trade gives you the same money, $120, give or take, but you need 6,500 on the line minus your credit, so 6,400, give or take. On Tasty Trade, you need a third of that, 2,300, and this is why I like the Tasty Trade. A lot less buying power, a lot more margin to use on a different trade, or if you want to do 3 of those to the same amount, if you do contract of 3, you are collecting now $400, and then look at the buying power, 6,800. This is like one contract on Robinhood, and now if you use Robinhood, you would probably need, I don't know, 6,500, about $20,000 to execute this trade and make $400. But let's go back to one. I'm collecting now $130. It depends when you execute this trade. Price in the middle. Remember, the price is 83. We are selling the 65, and if you execute this, now you get 130. It doesn't matter, it fluctuates every day, but at the end of the day, the price doesn't move too much. Every day this option will lose $4. You barely need $2,300 to execute this trade. And if you do the math, let's take our calculator. You put $130. This is your money to keep. Divide by 2275. Okay, multiply by 100. You make on this trade $5, not $5, 5.7% return on risk, ROR. And if you divide this by 46, you make about 0.12% a day. Everyone that tells you go make 10% a day and all that, no, that's not me. If you make 5.7% in 46 days, multiply that by 8, let's say, for example, which is like 360 days, give or take, it's about 40% annually return, roughly. I haven't calculated all of this. Trade small, trade often. This is what Tasty Trade say. Subscribe, let's grow this channel. See you next time.